My next guest says that Powell's insistence on inflation target means inevitable financing of the Treasury's record fiscal deficit spending, and that's likely to include a hard landing. I'm going to bring in 42 Macro founder, CEO Darius Dale. Darius, welcome to the show.
Hey, thanks for having me,
Charles. I kept the 10-year chart up. Obviously it's made this big move. I guess it hit a sort of a double top, some resistance there, but if I read your note correctly, you feel like maybe we still have more room on the upside with these yields.
Absolutely, Charles. And there's a credible case to get the 10-year to 5% in this cycle. I'm not sure we're going there, but if you think about where term premium are currently priced, where inflation expectations are currently priced, you could easily see yields back up 200-300 basis points from here over the long term.
And you talk about the Treasury's record spending. I look at that, and I think what really got this moving a lot was when Japan said we're going to take these yield controls off. So the Japanese buyer, they're the largest holder of our treasuries. If they start buying their own treasuries, that buyer goes away. China's been selling. Japan, Saudi Arabia's been selling. The Fed's letting it roll off. There's no necessarily buyers out there. I mean, they would have to offer a higher yield to attract buyers.
Absolutely. One thing we've seen in the last few years is the private sector share of marketable treasury securities has gone from about 36% to just shy of 50%. And we, the private sector, need higher coupons to capitalize the U.S. government.
Your firm, I want to talk about your firm for a moment because you talk a lot. I listened to some of your podcasts. I've read some of your work. You're about risk management. Now, we know as professional investors, role number one is risk management. On the retail side, that's not always number one. So I know it's part of your goal to sort of bring that to the retail investor. How are you going about that?
Absolutely. So what I tell retail investors the same thing all the time. There's three things you need to do. You need to learn to do very quickly if you want to be good at investing. Number one, you got to separate your research process from your risk management process. Your thesis on the market, it needs to be separate from how you trade your securities. Number two, you need to stop shorting. You're probably not going to be good at it. You don't have enough time to be good at it. And number three, create rules and stick to those rules and don't question them in the moment.
Where would the rules come from, though? I mean, would it come from trial and error? Would it come from the gazillion books that are out there, the stuff they see on fintech? How do they create those rules?
I think a rule, just a simple rule. If something breaks below the 200-day moving average, you need to sell it. If something breaks back above the 200-day moving average that you like, you should buy it. Let the market dictate your
follow the market.
Follow the market.
Listen, that was a big debate this year. If you remember, right, there was follow the Fed, which meant being short this market. If the experts, I'm talking the experts, or follow the tape, the market. If you followed the tape, you did extraordinarily well. The brainiacs are the ones who didn't make any money so far this year.
Bingo.
All right, you were talking about a scenario where right now there's a sort of Goldilocks. Economic growth up, inflation coming down. These are some of the sectors it favors. Consumer discretionary, technology, financials. This is pretty good. So for right now, this is a scenario that you like.
Yeah, absolutely. This is what we've been pricing in since January when we pivoted to transitory Goldilocks. We were a little bit late relative to our other Yale friend, Ed Yardeni, who I have a lot of respect for. But it took us a few months to get there. But this is exactly what the economy's been doing and exactly what the markets have been pricing in all year.
When I say telecom, I think of the old telecom from the tech bubble days with the wires and that stuff, and I think of the new telecommunication services. Yeah. Should they be the same? Because telecommunication services is leading this market.
Absolutely. So they are not the same. When I say telecom, I'm thinking of the AT&Ts, the Verizons of the world, as opposed to the Googles and Metas of the world.
Well, you do fantastic work, my man. I really appreciate you coming on.
Thank you very much.
Keep it up. Keep it up. People are learning a lot from you.
Thank you.